Raamdeo, happy Diwali. Thank you for joining us.
Yeah, very happy Diwali to you and all of your viewers. And I wish them all a fantastic year and very healthy and full of wealth, a year full of wealth.
Raamdeo, you know what we are debating today with all our guests is that the Samvat year
Yes.
gone by, which is 2071, was a disappointing year. It was a year of hope and hype. Markets had run up ahead of expectations
Yeah.
and then the huge reality check sinked in. Do you think we are starting the year with low expectations and with a promise that it could be a better year?
Yeah, so that's the best way to start a year. I mean, when the expectation is low and I mean, there's kind of a little bit of disappointment around from the political, from economic, corporate earnings and all. I think that's the kind of a right setting for a big move in the market. I mean, we have seen in 2002-3. I mean, even after the when the bull run started, I thought that it is not going to extend much. But finally, we saw, I mean, history's biggest bull market. So I think this kind of a little subdued environment and bit of disappointment at the start is very good beginning, I would say.
Raamdeo, good news and good prices don't come together. Now, right now, news is bad, whether it is Bihar or earnings
Yeah.
or what is happening to
Yeah.
China. But our price
Yeah.
is good. Our price is
Yeah.
attractive enough.
Yes, I mean it depends. I mean there are pockets of a little bit of a higher price, extended gains in some of the stocks which had happened last year. But I think there is enough to build a nice portfolio and enjoy the upside if at all whenever it happens in the market. So I don't see broad market is very reasonably priced. I mean not see using only P multiples as a measure to say that it is expensive, then obviously you'll find a lot of stocks expensive. But if you look at the broad market with market cap to GDP or corporate profits to GDP, which is so low right now, I think broadly, if you have a portfolio of 15-20 stocks, I don't think you're going to do badly if the market does well.
Raamdeo, a very happy Diwali once again, and the question is, what do you buy? Do you stick with the leaders, the Marutis, the IndusInd banks, or the cream mid-cap names, or is there time to now go out there and bargain hunt?
Yeah. So, I mean, it depends on your style. I mean, for me, I'm fully invested at every point of time. And whenever a great idea comes, we, kind of, we create a space or create the funds and get into them with a lot of conviction. So, I mean, more recently, I mean, say opportunities do come. I'm hesitating to talk about the stocks. That's my nature, but there are, I mean, for a very focused portfolio of 15-20 stocks, there is no dearth of new ideas. We have seen very promising recent public issues. I mean, your listing yesterday of Indigo, it is a world-beating airlines with the lowest cost kind of mileage and one of the most profitable enterprise India has ever seen at debut. I think in a growing sector and consumer facing. So you get opportunities. I mean, if you know what you want to buy, opportunities just roll into your hands, and you get opportunity to buy maybe 2% lower or 2% higher. Doesn't matter. But you have to keep throwing one bad stock and keep a better stock in. But if you ask me, is there a 15-20 stocks today? If you want to buy, then it might be a bit of effort, but there are enough to build a portfolio.
Raamdeo, since you're talking about the aviation sector right now, there has been a lot of hype and hoopla around Indigo, Interglobe Aviation. The listing has been a fantabulous one.
Yes.
Even right now, as I speak, the stock is already, above the 900 mark. Most people on the fear and retail participants are sort of worried out there on whether or not there is long-term money to be made in Interglobe Aviation. They worry that this is just perhaps a trading move, and before they can even catch the flight, it would have already taken off.
At least we don't think so. I mean, clearly it's some kind of a consumer cyclical and oil prices and the competition. I mean, these things will matter, but they have a completely unassailable advantage in terms of, see, because the very design of the company is an LCC in a country like India. I mean, when you do LCC in developed world like America or Europe, it's one thing. But when you do LCC in India, it's like a absolute cut rate kind of a airline, at least in the cost structure side. So they have really gone to the bare bone cost structure. So what is likely to happen is that the profitability, the profit margins can move from say 10% to 20% or something like that. I mean, there could be quite a fluctuation of the profit, but I think companies, this particular company by its design going into a loss, I mean any kind of serious loss in at least 4-5 years, I don't see that happening. And in what circumstances can happen? Of course, it can surprise us. I mean, our knowledge of this has been, and everybody is so scared. Warren Buffett has made aviation look so bad all over the world. But if you look at there are exceptions like Northwest or Southwest Airlines in the US. I think it's a 100 bagger, or I think it's a 1000 bagger in last 15-20 years. So and they have been trading at very high P multiples also. So we are in this country. I mean, this is a very large country where people fly from one side to other. Value is migrating from full service carrier to a LCC. Value is migrating from railways to LCC like Indigo. So we have a huge territory to cater to, 20-25% volume growth, good margin, good cash flow. It's a company which works on negative capital employed. So I see a lot of good features, but we are open to revise our view whenever we think it is not right.
Yeah, I think, well, that is a standard disclosure that people should take on board as well. Raamdeo, Niraj here, wish you and your team a very happy Diwali as well. You know, the other question that I have for you, Raamdeo, is that, you know, because of what's happened in Bihar or even otherwise, the government is now in full drive when it comes to reforms. Not that they have not been. Would you look closely at what the government could do on the reforms process, which may actually make some of the bad sectors appear fairly good because there will be a tailwind of government support, new funds, so on and so forth?
See, I think government has taken one big agenda, that is ease of doing business. And I think they are finding pockets of businesses where it is getting stuck, where people are suffering, where they are queuing up, and bureaucracy is taking a lot of time. So I think giving automatic route, simply removing the hurdles of percentages here and there, and all kinds of, wherever they are getting complaint, and they are just going in wholesale and very aggressive now. So coming down, I mean, improving on the ease of doing index, ease of doing business in India is the real thing. I think here ease of disrupting business is very high, and now we are seeing in a happy note that they are really reducing that and making the ease of doing business better. And as they keep climbing, the cumulative effect of that at some point of time, you know, as we go along, maybe 3 months, 6 months, 9 months, and then India will start flying again. So the first decade was defined by Chinese rise. The second decade has a chance of India rise. Whether it happens or not, one has to keep it crossed.
The mega trend for this financial year and the previous Samvat year has been crack in commodity prices. Oil has taken a drop of 50%. Iron ore prices are down by 50%. On paper, that is great news for India. But somehow that is not translating into a real earnings acceleration. So when do you think the drop in commodity prices will filter through at margin level and at EPS level?
Yeah, so what happens is that when this kind of disruptive things happen, there is one set of companies which suffer, and one set of companies, they start gaining advantage of this. So if you look at it, all the commodity companies like say Tisco or a Hindalco or Coal India, I mean all these companies which are big daddies, and they had massive gains in their profits in 2003 to 2013, they are suffering almost EBITDA losses. I mean, and it's a massive adjustment. But if you look at other side, oil marketing companies, HP, BP, IOC, I mean, of course, this quarter has been a bit of an exception because of inventory loss. But otherwise, if you look at year on year, it's going to be a fabulous gain in the profit. In fact, it's going to be 10% of the entire corporate profits. Almost 35-40,000 crores will come to this particular segment from literally nothing. Then we are talking about, say, all the automotive companies. Look at Maruti, look at their margin expansion. Look at Britannia, look at, I mean, whole lot of companies. Look at even Indigo in terms of aviation. So all the aviation companies, they have been complete red, and today you see they are flying in the sense that they are trying to gain the momentum. So the benefits will come slowly, but the decline is vertical. So we have to wait for the full gains to come, and we think, and biggest thing will be the inflation. I think inflation will be killed forever till the commodity prices remain low. So, and of that the benefit will be lower interest rate, higher investment. So I think there is a lot of things to happen into the future.
If The problem area for this market really is the financial space, and I'm keeping one or two haloed stocks aside, and HDFC Bank and a Kotak Mahindra aside, because they are better management companies and their liability franchise is better. Now, at a time when the entire banking sector has a problem, whether it's NPA or credit growth, how can the economy revive and how can the market revive? That's your 35% of the market. That's 35% of your market. That is the heart of the market which is not ticking.
So that's where the thrust of the reform should be there. What are the sources of these banks getting into trouble? I mean, apart from whatever managerial gap is there, you have the entire discoms, this 3-4 lakh crores of bad debts. I mean, Mr. Goyal is trying to rectify that. We saw the Uday, I mean, how it gets implemented, we have to see. So you have to go one by one. I mean, of course, steel cannot be repaired, but the things like all the infrastructure companies, your power sector. So once you repair them, automatically these sectors will have a lot of good assets rather than bad assets, and then mother of all the reforms, I mean, mother of all changes will be the interest rate decline. Because for the industries, the inflation is -5%. So they are reeling from their what is the lack of pricing power at their end, and then they have the highest cost of interest. So as the interest cost comes down by 100-200 basis point, you will see that bond gains in the banks and the interest cost of the corporates. So it is a package. I mean, you have to do all of it for it to have a very healthy start. Otherwise, we are going to have one segment of the index which is going to be very healthy and other segment of the index which is going to be very sick, and combined it will be sick.
Raamdeo, aside of earnings, what has really dampened the sentiment on the street has been the last straw in the hat, so to speak, pharmaceutical and the US FDA clampdown that we're seeing on the entire sector. I mean, I don't recall the last time Dr. Reddy's fell 14% in just one day. How do you approach pharmaceuticals as a sector right now? Do you buy the pain or do you wait for the news flow to stabilize?
It's part of the game. You made a lot of money, and I mean, these stocks are up 3 times, 4 times in last 3-4 years. So clearly there was outsized gains in these companies, and of course this regulatory thing is unpredictable, and it's part of the game. I mean, it is going to stay there, and but then size of the opportunity is massive. Let's not go away from size of the opportunity. Somebody is going to send those pills or injectables to US and developed markets and going to make a lot of money. So this is one of the biggest value migration story after the IT. This is the largest value migration story, global value migration for Indian companies. So yes, there is a temporary problem. They have to go through these regulatory hassles. But I think the opportunity is unprecedented, and this company will become stronger and better after this particular inspection. So I would think for long-term investors, these are hiccups, and I mean, if they know their companies well, I think they would last much longer.
Before we wrap up, everybody will be looking to you for ideas or thoughts. I'm not asking you to name a stock necessarily. Where do you think the best chance for compounding returns stay in the market currently?
Honestly speaking, I mean, the stock risk has increased significantly because of global matters. I mean, I just heard today, I read in the paper that China is selling every month $60 billion of US treasuries. So probably the US monetary policy is decided in China rather than in Washington. That's the kind of, so what I'm saying is that it's a crazy time in terms of individual stock selection. You have to have a nice portfolio, very well balanced portfolio, and from all aspects of it. So I would urge a lot of viewers who are not very good in stock picking in their own capacity. Those who are masters, of course, I don't have to give the advice to them. But the guys who are not smart, I think they should really choose a good fund manager, give the money to not one fund manager, give the money to 2-3 managers, and spread your bets across through SIPs or say 5, 7, 8 kind of lots. So you diversify the market timing, diversify the manager risk, and I think you will have a wonderful time in the stock market, because this is the market for last 30 years. It's a 100x. If you bring 1 or 2% higher than the market return in the longer run, I think you are going to make 100x in 20 to 25 years, and that's what we want for our savings.
We do, and that's what our viewers want as well, Raamdeo, to really hear your soothing, bullish, conviction-full voice every Diwali to keep the faith in the equities.
Yeah, I think this is very important. Actually, depressed market is the best time to start in equities.
Yes, it is, and we're completely convinced about it. Raamdeo, always good chatting with you, and wish you a very happy, healthy and prosperous year ahead.
Thanks. Same to you.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.